Welcome back. The recent major market rotation into small caps taking a breather today. The Russell 2000 set to snap a 5-day win streak, the longest stretch of daily gains above 1% since 1979, I believe, when the index was created. Here to share whether the rotation can find its footing again, Cantor Fitzgerald's chief equity and macro strategist, Eric Johnston. Eric, good to see you.
Great to see you.
It's funny, a lot of folks were calling for this type of rotation. Seemingly very few were positioned for it because the moves have been extreme. Where does that leave us?
Yeah, so people have been calling for it for a long time, and I think that over the course of the last 6 months, a lot of investors have been using small cap and more of the equal weight portfolio as the short part of their book, using it as a hedge. I think also from a retail perspective, a lot of that interest has really been in the mega cap stocks. It's where a lot of the dollars have gone. So we had the situation where you look back to the CPI last Thursday, heading into that. You know, the IWM was dead money. People had it as shorts, and that was the group that was best positioned, at least theoretically, right, from a Fed cut. Yeah. And that CPI, as we know, is what made September now a lock. And that all went into motion. You've seen the 11 to 12% rally that you've now seen. But I think if you take a step back and you kind of look at why has the Russell 2000 gone sideways for now 2.5 to 3 years, we're at the same prices we were 2.5, 3 years ago. Earnings for the Russell 2000 was $76 in 2021. 2024, the estimate is $74. Earnings have gone exactly sideways. And the reason is they obviously don't have the AI exposure, clearly. And then, number two is they are levered to a tighter Fed policy environment, right? And we don't see that environment really changing, right? They're going to start cutting in September, but you're going to have restrictive Fed policy for at least very restrictive for the next 6 to 9 months, and some sort of restriction for far beyond that, which we think will ultimately keep a cap on the group.
Aside from actual small caps, what about the rest of the market just outside of the big trillion-dollar club winners that had dominated the upside all year? I mean, do you feel as if it can become a little more of an inclusive market, or is it just time for a general pullback?
So I think, you go to like sort of the other, 494 on the S&P, I think it can be a more inclusive market, and certainly the outperformance that we've seen in mega cap tech versus the rest of the market, I think that, gap will shrink. But I think as we look out 6 to 12 months, I think the ultimate outperformers will continue to be the mega cap names. It's a theme that we've been, all over in terms of the large cap and mega cap secular winners, that until we really have that economic sort of cleansing, that they are going to be the leaders in the market. And I don't think that the events over the last 5 days or what the Fed's going to do in September is really going to change that. Obviously, on a tactical basis, there's a lot of nuances in there on a tactical basis, but that's kind of our more medium-term view.
I mean, referring to an economic cleansing, I mean, you basically mean a genuine downturn in the economy that's going to flush some things out, or is it just a reacceleration somehow?
No, I think a further slowdown. Yeah. So right now the economy is slowing at a slow pace. Yeah. And, one of the things that we're looking at is what are the causes of the slowdown, and are those causes going to change in the coming, 6 to 12 months? And you think of the causes, restrictive Fed policy. So I would expect the Fed funds rate to be 300 basis points, above the inflation rate for the next 6 months, and will likely decline to 2% over the course of the next year, but still in restrictive territory. And the consumer is still battling high prices, right? We have an inflation rate that's down to 2%, but we're still well above trend. That's causing a headwinds for the consumer, albeit being offset by the fiscal situation, right, where we're spending $2 trillion that we're jamming into the economy every year. And in addition to that, the wealth effect, right? Higher stock prices, higher home prices have absolutely helped this economy. And so until that changes, that'll be another buffer for the economic outlook. But we are slowing, and we don't really see a change to that path. It's just a matter of whether it picks up or not.